The best audit opinion is an unqualified opinion. This is issued when there are no issues or when issues are not material. That is, the issues are not likely to affect users' decision making. There are three types of modified opinions, namely qualified opinion, adverse opinion, and a disclaimer of opinion. In this clip, we will refer to a decision tree to determine which of the modifications to the audit opinion would be most appropriate. Consider a situation where management of the entity combined finance costs as part of general operating expenses in the statement of profit or loss. According to accounting standards, finance costs must be separately disclosed. The auditor believes that this would impact on users' decision-making abilities. What would be the most appropriate audit opinion? The first step would be to determine if the matter is material. As the incorrect disclosure is a breach of accounting standards and is likely to impact on users' decision-making, we can conclude that the matter is material. Thus, we cannot issue an unqualified opinion, but rather, the opinion needs to be modified. Step 2 would be to determine if the issue is pervasive. The incorrect disclosure of finance costs can be limited to a particular section in the statement of profit or loss. It does not affect other components of the financial statements. Hence, the issue is not pervasive. Accordingly, the appropriate opinion would be a qualified opinion. An adverse opinion and a disclaimer of opinion would not apply since the opinions are applicable when the issue is both material and pervasive. Now let's consider a situation where the client's accounting records were destroyed when a nearby plant exploded. The auditor is unable to verify the amounts included in the statements or obtain corroborative evidence. What type of audit opinion would be appropriate in this situation? The issue here is material as it would undoubtedly affect users' decision-making. Hence, we cannot issue an unqualified opinion, but we have to modify our opinion. In terms of step 2, the issue is pervasive since it is not limited or restricted to a specific element or component in the financial statements, but all amounts included in that financial statements are affected. Hence, a qualified opinion would not be appropriate in this instance. Now that we know the issue to be pervasive, we need to determine the cause of the issue. The destruction of accounting records by fire is not a disagreement, thus an adverse opinion would not be appropriate. However, the issue is a limitation of scope. That is, the scope of the auditor's work and ability to verify amounts is limited, even though this is not intentional. Thus, the correct opinion in this instance would be a disclaimer of opinion. To recap, if an issue is material, the auditor cannot issue an unqualified opinion, but will have to modify the opinion. You can use the decision tree to arrive at the appropriate type of modified opinion.